Hi, this is Lara at Elliott Wave Gold with your daily gold analysis done after the New York session ended for Tuesday the 27th of August. I'm recording this video 11 PM in the evening, New York time, on Tuesday the 27th. I have two wave counts for gold for you today, but before we go there, I'm just going to jump into Motive Wave and show you a problem which makes quite a big difference to the wave count, and it really is the reason why I have two wave counts today. On the daily chart, this is my main wave count for gold, and this price point here, the start of minute wave 3 within minor wave C, is dated 14th of August, and the low for that candle on the daily chart is 1315.92. But when we look at that data at the hourly chart level, this is the start here, it's not quite as low, it's 1316.05. That makes quite a difference to the wave count because, as you can see for this main wave count here, this first wave is $71.20 in length, the third wave $68.58, and the fifth wave $68.61, slightly longer than the third, so that leaves the third wave the shortest as we label it on the hourly chart. On the daily chart, the lengths are different. The first wave $70.70, the third $68.71, and the fifth $68.64, slightly shorter. So, for that reason, I have an alternate wave count for you today. Depending on whether you look at the data point on the daily chart or the hourly chart level, it makes a really big difference to the wave count. So this is my main wave count for gold. This wave count follows directly on from yesterday and expects that we have probably had a trend change and an end to a fourth wave intermediate degree zigzag correction. It's showing some alternation with intermediate wave 2. The fourth wave is shallower than the intermediate wave 2, which was a relatively deep correction. This fourth wave may have been over yesterday in a Fibonacci 8 weeks. If it's over, we should redraw this parallel channel drawn around primary wave C to the downside. Draw the channel now from the end of 2 to 4, place a parallel copy on the end of 3. If this fourth wave is over here, then we cannot see movement above 1423.92. If price makes new high above this invalidation point, then we will use the alternate wave count that I'll go to next. If intermediate wave 5 has begun here, then at 1101 it would reach 2.618, the length of intermediate wave 1, $50 off, where primary C would reach equality in length with primary wave A. This target is several weeks, if not months away. When we get towards the end of it, I will try and reduce that rather large target zone for you. Expect downwards movement for this wave count to find support at the lower edge of this redrawn channel on the daily chart. However, it's a reasonable size trend change. The new downwards trend for the final fifth wave should last week, maybe even months. So we really should be wise and wait for some confirmation before having confidence in this wave count. Initially, I would want to see the hourly wave count invalidated with price movement. After that, I'd want to see the trend channel on the hourly chart breached. And finally, when we have this channel containing the upward zigzag of intermediate wave 4 clearly breached on the daily chart, with a full daily candlestick below this and not touching the lower trend line, we can then have full and final confidence that the fourth wave is over and the fifth wave should then be underway. Initially, the very first thing I would want to see is a red candlestick for the current session, which is still unfolding. Let's have a look at this one on the hourly chart, where the end of minute wave 1 within minor wave C is this point up here. So here we have 1, 2, 3, 4, 5. This is still my main wave count because it also agrees with MACD. The middle of the third wave is showing the strongest upwards momentum. The fifth wave is a slowing of momentum. We have classic technical divergence with MACD trending lower while price trends higher. It all has a really typical look. The only problem with this wave count is this point on the hourly chart doesn't agree with the price point on the daily candle for that day. If this wave count's correct, we shouldn't see any movement above 1423.92. Importantly, a second wave correction can be 100% the length of the first wave, so upwards movement could touch this price point. It's only movement above this price point which invalidates the wave count and would then confirm our alternate. If we see movement below 1384.60, we may have some confidence in this wave count, and movement below the trend channel on the hourly chart here with a good couple of hourly candlesticks below this channel and not touching it would provide initial trend channel confirmation for this wave count. Alternatively, it's all the same to this point here. This alternate wave count is identical to the main wave count right up to here, and then I've just moved this piece of movement here down 1 degree. It's certainly possible that intermediate wave 4 is not over, and that within the C wave of the zigzag, within minus C, minute wave 3 is extending, and third waves are commonly extended. This resolves the problem of that price point down here being unable to be correctly determined. So instead of minute 3 ending here, this may have been minuet 1, 2, 3, and we need the fourth wave and the fifth wave. So we'd be expecting more upwards movement, and at 1441, minor wave C would reach equality in length with minor wave A. This alternate wave count expects quite a lot more upwards movement several days yet. Let's have a look at the structure of minor wave C on the hourly chart, where the end of minute wave 1 here is this point here. So here and here, this wave count is identical to the main wave count, and after that I've just moved the degree of labelling here, or down 1 degree. All the subdivisions are seen in exactly the same way. So if minute wave 3 is extending, within it we have 1, 2, 3, we need a fourth wave correction to complete, which can't move into first wave price territory, and that's why movement below 1384.60 would invalidate this alternate and provide some confirmation for the main wave count. If we see a new high above this point, the main wave count will be invalidated and this alternate would then be confirmed. The biggest problem with this, and the reason why it's my alternate, is it doesn't agree with MACD. Within this third wave possible here, it's the first wave which has the strongest momentum, and you really would expect, even with commodities, to see the middle of third waves having stronger momentum than first waves. So this doesn't really fit. We have divergence with a third wave. That doesn't look right. Now, just before I end this video, I'm going to go back to motive wave and show you this idea I've been working on is identical to my main wave count to here and here and here and here, and after that, instead of another 1, 2, I'm trying to see if it's possible to see if from this high to this low we could have a completed 5-wave impulse. Could this be the end of cycle wave 4 zigzag, and could we be in a new upwards trend? I don't think so, because when I try and see, and I've tried several different combinations, when I try and see this downwards movement as a completed 5-wave impulse, this movement here is the problem. This has to be a 4th wave double combination, but it just doesn't fit, especially the subdivisions within the Y wave. This would have to be the second structure, which could only be a zigzag. It can't be a flat, it doesn't meet the requirements for a flat, and when you look at the subdivisions of this on the hourly chart, it quite simply does not subdivide into a 5-3-5 zigzag. It subdivides only as a triple zigzag, and you can't have combinations within combinations. The maximum number of structures within a multiple for Elliott wave rules is 3. If you start labelling combinations within combinations, you've increased that multiple beyond 3, breaking an Elliott wave rule. So this wave count's invalid, that's why I'm not going to publish it. So we have a small price zone. We need to see price break out of that zone to confirm one wave count and invalidate the other. At this stage, I slightly favour the possibility that we've just seen a trend change at intermediate degree, but first I want to see a red candle for the current session. That's all for me today with your gold analysis, and I hope that everyone had a fabulous day.